It's a new quarter, the final for the year, and investors will be looking back at the 9-month performance of several companies on the NGX to guide, their direction when it comes to investments in the month ahead. Year to date, the Nigerian Stock Exchange is up 38.9%, outpacing inflation. For the month of September 2025, the market gained 1.72%, accompanied by a rise in market capitalization to 90.5 trillion naira from 88.76 trillion naira. And provide more insight on the year-to-date performance of some of the most liquid stocks on the exchange, we have Oladipo Ajayi, head of Fixed Income and Forex at Chapel Hill Denham. Thank you for joining us.
This morning.
Right, the pleasure. So we've seen some weakness in financial service sector, especially in September, both banking and insurance. Banking is down 0.95%, insurance 7.21%. What would you say is account for this pullback in their performance?
Well, if you notice, immediately there was immediately after the announcement of the recapitalization of the insurance sector, we saw improved activity in that segment of the market. We saw that heavy bullish run. And but in the month of September, we saw a bit of pullback, and that's basically more like profit take, because getting to a level that the valuation is now actually the current price is now actually more than the actual value of some of these instruments, and that's some of the reasons why we noticed that some savvy investors came into the market and started reducing their positions in those instruments, and that's one of the reasons why we saw that level of drop in the insurance sector, and that is also applicable also to the banking sector as well. For the banking sector, if you notice that the early part of the month of September, we saw a bit of lowness in the markets. Not much activities were happening at that beginning of the month. But immediately we saw the results of Zenith Bank and GT, and that would have been the catalyst that market would have expected to actually drive the banking sector. But when you look at the results released by both banks, for Zenith, it was actually a very good result, but because of the forbearance provision, that actually led to the fact that the return was less than what they actually did after last year. And that actually brought about a bit of panic in the market. So we noticed a bit of sell down by some of both locals and foreign investors. And these are key things that actually drove the market in the month of September.
And we'll come to those individual companies and what they're doing to incentivize investors. But there are some that are also saying that the late earnings release, that's H1, has also impacted the performance of some of these stocks. Do you agree?
Yeah, it's true. But don't forget that the tier one banks, what they normally do is that they actually release audited reports for H1, unlike some other banks that just release the unaudited reports. Because banks like Zenith, GT Bank, Access Bank, UBA, and First Bank are trying to ensure that their half-year result is actually audited result. To that extent, they have that antecedent of actually releasing their results for H1 a bit late. But what we saw this year was exceptional because it actually lingered beyond the market expectation, even to the extent that some of them actually released their results in the month of September. And also, you don't totally blame them because I guess because of the forbearance expectations, provision expectation that was actually announced by Central Bank. A lot of them need to actually ensure that they actually tidy their book before actually releasing it to the market. And I guess that's one of the reasons why the results actually lingered that long. But market was not concerned about what market was concerned about, that it was a delayed result. And as a result of that, they actually punished some of these instruments.
Indeed. And we are also seeing, speaking of results, Access Bank, they are delaying, and perhaps you can correct me on this, we still haven't seen their results. They have pushed the release of their H1 results to 22nd of October. And we also know that Access Bank, they have done a lot of expansionary moves, extending their tentacles. Are they taking on too much too soon? And how is this affecting their ability to get their books together and put their results out?
Well, I will say that you are not right because to a great extent, they actually mentioned that one of the reasons why they had to actually further delay to October 22nd was because of the fact that they need to further actually consolidate their book appropriately. And that's one of the reasons why they seek extension with NGLs. If you notice that as of July 30th, Access released a circular to the market declaring that the board has sat on the result and they are okay with the result and that they approved. So they actually notified the market, and then they said, oh, they will actually have to submit the result with the central bank. So after that, the result will be released to the market. And I think about 14 days later, they actually released another circular stating that there will be a further extension before we also saw another circular on the 22nd of September, meaning that so it simply means that what's currently happening is between Access Bank and Central Bank. So I want to believe that Access Bank has submitted the result with Central Bank. Maybe there's some clarification that Central Bank also needs in that result. That's one of the reasons why we've been seeing more of that back and forth. But I think they have just one lifeline to actually go, which is October 22nd. And each of these extensions, the stock of this bank has heavily be punished as a result of that. When most other stocks are actually enjoying that huge rally, when you see that then it moved from 44 to around 70 level, you see what happened in GT Bank moving and crossing 100 naira. That Access Bank did not actually benefit from this because of the announcement of the extension, because a lot of people were like, you don't even know when this result will be released, so why are you taking risks in that instrument? And that's exactly what happened. So I hope by October 22nd, Access can actually live up to expectation and release the result to the market.
And I mean, obviously, this is raising red flags, and we are seeing it in the stock. This is raising red flags for investors. What do you think that investors need to see from the bank or from the group to perhaps have their confidence boost? And to add to that, year to date, Access Core is down 8.18%. Again, what is there any upside for them? What do we need to see for confidence to be boosted in the stock?
Well, like I mentioned, the first thing that we need to see is that we need to see good dividend payouts. One way or the other, this would serve as more like a compensation to foreign investors that actually waited this long in the stock. And aside that as well, they need to actually post a credible result and a credible and a fantastic result. These are some of the things that market will actually expect from them, because you can't wait this long and at the end of the day, what you are posting is more like an abysmal result. Of course, market will further get infuriated and actually punish the stock for that. So the only bailout for Access is to actually post a very good result and also ensure that they actually pay a good dividend. But putting that aside, when you look at the Access, as you speak currently, the stock is heavily underpriced. When you compare Access with other pairs, currently what is Access price to book is just about 0.39%. When you compare that to a GT that's currently doing 1.12, or a Zenith Bank that's already doing 0.62%, 0.62 price to book. So when you look at it from that perspective, you will know that the stock is heavily underpriced. But the only catalyst that can actually help the store to actually improve will be some of the things I've highlighted. And on the part of the fact that the stock had actually not performed very good this year. When you look at it at the beginning of the year, the stock actually started very good at the point in time. But when you start seeing bad sentiments around the market or around the stock, these are some of the things that actually led to the sell down. At a point in time, Access was trading over 30 naira. But as you speak currently, this stock is trading around 25, circa 25 naira in the market currently. So when you look at it from that perspective, you know that currently what they are going through is because markets the confidence in the leadership or the confidence in the stock is actually very low as you speak currently. So the management need to also do more. Maybe you need to engage the investing community around this thing and to actually pitch what they are doing. If you notice, sometime last year, Access Bank mentioned that what they will be doing just to consolidate on all the acquisitions. And earlier in the year, we also heard that they are also buying another bank. So this is more like a competition to the market, that the market was already expecting you to start consolidating so that we can see the impact of all this acquisition. But if you are still buying at this particular point in time, so when would you start consolidating? So when would investors start enjoying the risks they are taking on this stock? So Access Bank need to do more, and that's exactly what actually affected the stock.
All right, we'll see whether or not they sit up in the quarter ahead, but definitely for now, the market seems to be punishing them. Let's move on from there to Wema Bank, a tier 2 bank. It has been on a roll, right, in recent weeks, even though, it's down in recent weeks, but for the year to date, it's at 90.1%. Before the pullback, it was at 97.8%, almost 100. So, what's to account for the recent pullback? And do you see them maintaining momentum in the final quarter?
It's a new dawn for Wema Bank. Joanna, if you look at their result in the half-year results, it's actually a very fantastic result. Compare their 26.5 billion profit after tax last year to a whopping 87.5 billion result for this year. That's almost like 300% of what it did last year. And when you look at that from that perspective, what comes to mind is the fact that it seems that a lot of things have changed in the bank, and that is the result we are seeing. And don't forget also, Wema Bank is playing aggressively in the fintech space. When you look at Wema Alert, I think it's one of the pioneers in that industry. Currently, they are sweating out some of these innovative ideas, and that's actually panning out very well for them. And currently, the market had huge and great confidence in the stock, and I think that falls from the leadership of the bank. Currently, they are actually doing fantastically well. When you look at their performance over time, this is a stock that was trading 50 kobo at a point in time. But when you look at it the movement from then to now, you'd have seen huge change in terms of the strategic direction of the company. You'd have seen that they have a vision, they have a focus, they know where they are going currently. And that's one of the reasons why the market is buying into the Wema Bank story. So I think it's not only for now. It's a bank that if they continue in this stride, they will actually move beyond that and maybe one day become part of the tier 1 bank in Nigeria.
That's very ambitious to say. Well, one of the tier 1 banks in Nigeria. I will say about that. Of course, one of the oldest banks as well. So maybe it's about time. Our time is fast spent. Let's touch on Zenith Bank. We know that some of the results that were released were not so impressive, especially for investors, but they seem to be whetting investor appetite by increasing dividend by 25%, while others are cutting back. What do you make of this strategy?
For me, I think that result is actually very impressive because when you look at their performance for the year, Zenith Bank posted 532 billion. Compared to the 577 billion that they actually posted last year. But don't forget that the Zenith Bank actually made provision for a forbearance loss of about 760 billion. So it means that if Zenith Bank has not gone that route, if no provision has been made, the Zenith Bank would have posted close to about 1.2 trillion as half-year results. So if you look at that from that perspective and also consider the fact that of course, they've actually cleaned their book currently, so they can actually fly lighter than the way they used to. You understand? When you look at it from that perspective, it is pretty clear that Zenith Bank will actually perform better in the other half of the year. I'm actually waiting to see their results in Q3 because if they are able to actually replicate the same performance they actually put out in Q2, in Q3, I'm telling you. Zenith Bank will be more like the signature of all high in the banking industry. Because aside the fact that they are paying very good dividend, currently they are paying about 150 kobo. And aside that also, you look at the fact that the valuation, and like I mentioned earlier on, when you compare Zenith Bank and GT, currently the price to book of Zenith Bank is about 0.62 price to book. And when you compare that GT of 1.12, it's pretty clear that Zenith Bank is very, very cheap. And so what market just needs to know is that to actually get to believe in the story of Zenith Bank and also capitalize on the advantage that is bringing to the table.
So obviously ample upside for the bank. We'll see how things pan out in Q4 for these stocks on the exchange. But thank you so much for your time. Oladipo Ajayi, Head of Fixed Income and Forex at Chapel Hill Denham.
Thank you very much for having me this morning.
Pleasure.